The last Fed meeting is coming up this week, and it's going to be juicy. Hey and welcome to this video. My name is Julian. On my channel I talk about crypto, decentralization, the markets. It's all about making you crypto fit, understanding this world of decentralization. And on my way here to my first meeting Monday morning in Singapore, I wanted to give you a bit of my thoughts on the upcoming Fed meeting. We have CPI numbers on Tuesday, the 13th. Expected is definitely a bit of a slowdown of inflation, which would obviously be good for the interest rate hikes. The Fed then on Wednesday is expected to come out. A lot of people are debating if they can have those CPI numbers go into their decision making, and a lot of people say yes, that will definitely happen. I do expect, no matter what the CPI numbers are, 50% are 50 basis points, so 0.5% of interest rate hikes, we're gonna get to around 4.5% as a whole then. And why is this gonna be juicy? Well, first of all, it's gonna be a volatile week because of that. Crypto, general markets, I really expect them to be volatile. Crypto markets have been flat for the past months. After FTX, after that setback, market's been very, very flat. Low trading volume. Most people are not happy about those prices. So buyers think it's going to go lower. Sellers think it's going to go higher. So very few people need to actually make a transaction at these prices. In the general markets, we have seen both. We have seen strong weeks up. We have seen one of the worst weeks down last week again over the past couple of months. So everyone kind of anticipating that move. Now, why is it going to be juicy? Well, first of all, I think a lot of people blame the Fed with the interest rate hikes for getting markets down. But that's actually BS. What's really happening is the Fed is simply putting the markets to where they should have been had there not been all the stimulus during COVID. So if you actually go 3 years prior, so you should go 3 years back. And 3 years back, the economy didn't look all too great. It was actually a time when I had positioned a lot of shorts and a lot of put options, not because I had anticipated COVID, but just because the economy was not doing well and I was expecting a lot of setbacks. And so for me, that COVID kind of sell down, even though I didn't fully utilize it, because again, I hadn't expected it, came actually quite well. My bonds at that point did really well. I was positioned short and I had some options on because it was not going well. And then COVID hits in, everything tanks, and there's this massive stimulus. And so now people completely get spoiled with this massive stimulus that basically creates fake asset prices. And people think these are the real prices, forgetting that this has nothing to do with real world. And now the Fed kind of turns around, and it's absolutely normal that we would have lower prices, that we are going to go into a recession, that we have some really tough times ahead. And so the reason why I think this is going to be juicy is because it's probably going to be the last time the Fed matters over the next 12 months. Unless the economy, housing, unemployment, all these things get so bad that the Fed is not only going to go and just say, you know what, we're going to lower interest rates, which key thing, most people are going to say, oh, interest rates are going to be lowered, that's going to be bullish. BS. Why do you think it's going to get lowered? It's going to get lowered because the economy is not going to do well next year, in my opinion. So they're going to lower interest rates because the economy is not going to do well. Now, the exception is if they do quantitative easing. So if they go in and they do quantitative easing, where they're going to go and say, you know what, we're going to print money galore. We're actually going to crush interest rates. Going to go from whatever 5% peak to 2%, 1%. That would be really surprising. Then obviously assets are going to rally like crazy, and we're going to have this yo-yo effect that most people are really scared of, which is this concept of stagflation. Times of inflation, recession, so this yo-yo, and this is like super disastrous. So I really hope the Fed isn't going for this and can resist that so many, well, even Elon Musk on Twitter goes out and says, the Fed shouldn't be raising rates. And I think we should totally raise rates. I understand that this is going to be some really massive short-term pain, and I am not all too bullish about 2023 because of that. But I don't know. I just want to be very clear that that's going to be the right stance, in my opinion. So let's see. It's going to be a key week ahead. This is the stuff that I'm watching. Let me know what you think about all this. Are there other things that you feel are even more essential? Would be interested to know. Let me know in the comments. If you have questions, let me know as well. I'll do a DeFi chain video a bit later tonight. Tomorrow, Tuesday, we have the Cake DeFi Insights. We're going to talk about that, obviously, as well. And yeah, let's see what else happens this week. So I'll definitely make a video, probably another one on Thursday after this entire mess is going on. So have a fantastic week. If you don't want to miss any of those good stuff, subscribe to my channel here. Subscribe to the Cake DeFi channel, and then you're going to be up to date all the time. So thanks so much for being on that journey, making the world crypto fit. Appreciate it. See you next time. Yours truly, Julian. Bye-bye.